Hi everyone, today let's talk about the Fed meeting, then we'll go over the Meta earnings report, then we'll take a look at the economic calendar as well as the Fed futures, as well as Max Payne. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Fed raised interest rates once again, 25 basis points as we expected, putting the target range into that 5.25% to 5.5%. At the previous iteration, they said that there were going to be 2 more hikes this year, but they kind of backed off of that. If you watch the meeting, he continued to say they're going to be data-driven, and that was the consensus at the previous meeting, but he did not confirm that going forward. He did highlight that inflation is lower than expected, and we've seen some good data on that. But he continues to say it's going to take a long time for inflation to get all the way down to the target rate. He said he does not think that's going to happen until 2025, which means we're going to see higher interest rates this year, which is expected, but we could potentially see interest rates stay higher for longer next year, and the market is currently pricing in at least some cuts next year. But if we don't get good data to support that, that may or may not be pushed to the right. Initially during the meeting, he was saying things around the idea of not getting another hike this year. Obviously, he did not come out and say that, but he kind of danced around the idea of another hike and did not commit to it versus the way that he did at the previous meeting. He did mention that the job market is starting to cool slightly, which again is feeding the idea that we are going to get lower inflation numbers going forward. But he also talked about how the core CPI rate is remaining elevated and that we could see the headline CPI head in the direction of core, which would absolutely upset the markets. Overall, he was kind of mixed across the board, and we kind of saw that in the markets as well. Moving over to Meta earnings, they did better than expectations, up around 7.5% after hours, double-digit growth. The company is still doing much better than they were just a few months ago. Looking at the earnings, beat by 7 cents, revenue beat by around 800 million. Daily active users continues to grow, monthly active users also growing, average revenue per user also higher than expectations. Everything continues to be pretty good here for Meta. So far we have Meta and Google outperforming expectations, while Microsoft is lagging, Tesla not doing so good either. Moving over to the economic calendar, you can see building permits, slightly better than expectations. You like to see it. FOMC as expected. Tomorrow we have durable goods, GDP numbers at 8:30. That could be interesting. Initial jobless claims also at 8:30. And then 7-year note here in the afternoon, just to keep an eye on those interest rates. Fed balance sheet, we're expecting about $90 billion to come off of the Fed balance sheet. We'll see how that plays out tomorrow as well. Moving over to earnings, you can see Meta outperforming, Coca-Cola also outperforming, Union Pacific missing on both, interesting. Boeing beat, still losing money, but they did lose less than expectations. AT&T beat on earnings, missed on revenue. Overall, still not too bad. 2 top companies outperformed. Moving over to tomorrow's earnings, there's not very many big companies, but there are a lot of companies. So you got MasterCard, Nestle, L'Oreal, McDonald's, Comcast, T-Mobile, Intel, Honeywell, Bristol Myers, American Tower. Then you have Mercedes-Benz Group, as well as Volkswagen. And then you got Northrop Grumman, Ford Motor down here as well, Hershey. So quite a few known companies, but nothing huge. Biggest one obviously being MasterCard. Moving over to Fed futures, you can see it's just under 8 weeks away. Now for September, the highest probability is a pause. I think that's fair at this point. Like I said, he was kind of dovish and a little bit mixed on some points. Looking at November, higher probability of a hike in November, but still favoring the pause at this point. Looking over to December, very small possibility of a cut. I think that's unlikely. Currently, most likely is still paused at this level, and then again, a small potential for a hike. And then just looking out to January, highest probability is this level, but could go either way based on the secondary percentages. Moving over to Max Payne for the end of the week. Max Payne sitting at 449, put call ratio still 2.3. This call wall here at 460 continues to shrink, which is interesting. Put wall still here at 444 and 449. Continues to look like we're going to drift up a little bit over the next few days into this zone, just around that 458, 459 area towards the top of the puts. Anywhere between 451 and 460 makes sense, but you can see where it would make even a little bit more sense, just a little bit higher than those puts. Moving over to the charts here on the S&Ps, basically no change from yesterday, still trading within this range, through a wick to the upside and to the downside, finished up a little bit, fell a little bit after hours, kind of choppy in the zone. No change, you can see we wicked those highs once again, still not making new highs, so we're definitely consolidating in the zone. And if this starts to break down here from a consolidation, that could point to a more significant pullback. Moving over to the Qs here on the hourly and the daily, you can see similar thesis, chopped to the downside, through some wicks to the upside, still holding in this zone. I definitely got chopped up a little bit on this down push, got stopped out of some positions, bought some positions back up for the end of the day. Then you can see this last hour wick definitely looked a little bit more dangerous in the shorter time frames. Ended up closing just fine and then rallying up here a little bit after hours. So still looking a little bit bullish going into tomorrow's session. Daily chart, just a doji, not showing much of anything. Momentum, bearish, RSI, still bullish but below the SMA. Shorter time frames looking a little bit more bullish than the daily. Moving over to the Russell and the Dow, you can see the Russell ended up rallying just a little bit off of that level. So we dipped below it, got above it, held, and then rallied throughout the day. We're falling a little bit after hours, but not by much. Everything still looks okay. Momentum basically zero. RSI looking okay, still above the SMA. Nothing crazy, but slightly bullish. Dow rallied during the day, and you can see a pretty big move here after hours to the downside, which is interesting. We're below trend now after hours. Looking at 353.62 for a potential area of support. We did test that in the pre-market here today. You also have the 21 EMA sitting just behind that at 353.34. Might be something to watch here. It is still above VWAP as well. So a couple of levels on the Dow, but looking a little bit weak after hours. Momentum bearish, RSI moving lower, below the SMA. Moving over to the equal weighted S&Ps, you can see it's grinding right along this trend line here. We've been on this for the last 6 days at this point. Still holding at that level. You can see we're right at the highs going back to February as well. That wick high getting very close to that level. Momentum fading. Still a higher RSI read than this previous peak. So we're not showing divergence yet. It continues to drift upwards a little bit, but definitely getting into a zone of rejection at this February high. Moving over to Apple. Apple showed some life here on the first candle of the day, pushing back into these previous highs, getting above 193.96. So this is officially back in a bullish trade if you were to be trading it, in my opinion. Ended up getting kind of a doji style candle in the middle of the day, but we're still above support. Everything looks okay. We did not take out these highs or anything crazy like that, but it does seem like we are going to be pushing up a little bit more here tomorrow. Again, using that stop of 193.96. Tesla, straight sideways, not doing much, right on that level, getting chopped if you're trying to trade it. Definitely a little bit tougher. 21 EMA, still holding down the fort. You're also below the 9 EMA as well as VWAP. You really want to see it get above this consolidation of levels and then start to push back up to that highly traded zone at 273.85 if it's going to happen. Right now, this still looks like a high, lower high setup, waiting for that bigger breakdown to take out this previous low. Moving over to Google and Meta, you can see that push on Google earnings right up to my level. It is still holding below it. We threw wicks above it, but we did not get above it on a closing basis on the 12-hour. Momentum still bullish, RSI still bullish volume as well. Obviously, earnings could push this even higher. It's just consolidating in my opinion, but you really need to see it get above this 292 level, hold that, and then you can trade off that as support. Right now, you're at resistance, waiting to see what's going to happen. Maybe we pull back to 126.42, you trade off that level and then get a continuation higher. That would be interesting. Right now, not much to do with it. Meta also hitting my level, 121.68 was my level going into the day. Just below that by around 20 cents. Above that, I have 333.01. And you can see these levels are coming from the lows going back to October of 21 and the highs of December of 21. So this previous consolidation was what I was watching going into the day. And we basically hit the bottom of that consolidation. Had a couple of points of weakness, but this was really the main bottom in my opinion. And now you can see we're right in that level once again. If it holds this bullish momentum and we get good guidance, then you could see this push up to 333 and then potentially 346.15. Moving over to staples and discretionary. Staples still holding in the zone. Still looks really bullish. Might just be consolidating and cooling off a little bit. You can see we're definitely overbought. Momentum fading slightly. Still a much more bullish structure than discretionary. Discretionary broke down. I added this level here at 170.68 here today, just because it's been holding in this zone for a while and it kind of marked a top going back to 7 July. So this is a new level, one to watch. If this breaks, then you can look for that 166.78 level that I had been watching, which is also right on top of the 144 EMA at 166.73. Kind of a similar setup to Tesla, looking at that 55 and 21 EMAs. If this continues to trend down, price action holds in the zone and it starts to get pushed out of that area by the EMAs, then you could see that bigger breakdown. But right now it's holding this level. It's tested it a few times and it is something to watch going forward. Moving over to breadth here on the 50 and the 200. 50, another bearish day. 200 showing bullishness, interesting. So still mixed on breadth, not going higher, still stuck at resistance on both of these charts. You could maybe argue that this trend is breaking down now. We'd been holding it for a little bit. You could probably adjust this to make it look like it's still holding in there. We're still above all the EMAs and SMAs. We did get our first touch of bearish momentum on the 50-day average, which is definitely interesting. RSI still holding at that same level. Not divergent yet. We're definitely right in that same zone for the peak. But if this pushes up one more time and we get a weaker RSI, that could be another indicator. 200-day average, you can see clearly getting a higher RSI read versus this other peak. So still holding up. Trend is still okay. But 92.25 is a key level to watch as we continue forward. Moving over to the dollar here on the 4-hour and the daily, we finally got a little bit of a breakdown. So we had that consolidation day yesterday, got a continuation here today. Now the question is, are we going to come down to this 55, hold that level, set up a higher low and then rally? Or are we going to go straight through that and continue lower to this next level around that 98.20 level? Based on the longer term trend, we should continue to break down. But you always have to pay attention. We did get above those shorter EMAs, 55 here on the 4-hour, 9-day moving average sitting in that same zone. If those hold, then it's a higher low setup. If they break, then you're looking for a lower low down at this previous level. Moving over to JNK and TLT. JNK still consolidating in the zone, but a very strong candle on the day. Finished very close to the highs as well. We're above 92.50. Certainly interesting. If this breaks out here, starts to push above $93, that could be quite bullish. Momentum flipping back to bullish on the day. RSI looking good, volume looking good, so a little bit of risk going back into the markets after the FOMC announcement. TLT still holding in the zone, yields didn't really go anywhere. TLT not going anywhere either. Moving over to the volatility indices, both of them went down here today. Nothing interesting came out of the FOMC, and so we saw that volatility come out of the markets now that we know exactly what they said. Overall, not much to say here. You could look for a breakdown of this level and a push down to that 1177 area. That could be quite bullish, but otherwise still continuing sideways for both of them. Moving over to my accounts, definitely jacked up on the P&L for the day. You can see my accounts are about $150 higher than they were yesterday, maybe $200, something like that. Overall, not bad at all. IWM, I still have those shares. I ended up rolling out both of those calls. We were basically at my break even for the calls, so I decided to roll them to get a little bit more credit. I also rolled up to 196. Pretty good day on the IWM. I'm still fairly bullish on it. I also sold some intraday puts to get a little bit extra money on that rally here today. Everything worked out on the IWM. Qs chopped around quite a bit, ended up down 1.26 on the day. It's up a little bit after hours on the Meta earnings. I do have one covered call out to 378 for a $1.47 credit. And like I said, it's up a little bit after hours, about 75 cents, so that'll be good. You can see just how much I got chopped around on those shares. I was able to protect myself trading options on both sides of the market, so that helped out a lot. But yeah, definitely a lot of price action, breaking through my levels, getting stopped out, re-entering positions. It's kind of the name of the game on days like today with the FOMC, but I was able to defend it pretty well, and I was honestly pretty happy with that performance. Going into tomorrow, I do have a 377 put in $55 profit. Got about another $1 to make there as long as everything works out. There's also a few cents left on this 377 put from today. Obviously, that's going to expire worthless, and that should hit my account tomorrow as well. Overall, still neutral on the Qs, still bullish on the IWM. Let me know down in the comment section what you thought of the FOMC comments. Are we done with hikes for the year like it's priced in right now? Or are we going to get another hike in September or October? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.